Hello, everybody. How are you doing out there? It's CJ. Thursday morning, the 17th. I'm actually here, believe it or not. Boy, looking forward to talking to you guys. Looking forward to going through some slides. Don't have enough bandwidth to actually get up there with the video, so you're going to have to bear with me just a little bit as I make it through. I'll be able to get through your chat questions, Q&A, etc., etc. We're going to get rolling here pretty quickly just so that we can make good use of our time. Somebody give me, and you're going to have to see this every time whenever I start looking, and I'm getting the knocks all over the place. Fantastic. Good to be with you guys. Sorry you're going to have to see this side of it in terms of the production, but you know what? Sometimes you have to see how the sausage is made, right? This is how we make the sausage. Here we are. Let's go back to these. I'm going to have to look at the slides as I'm talking to you, and then I'll go over and look at the chats and look at a couple of the questions, etc., etc. Let's talk about what's going on in the market today, though. Wall Street set to drop with tech stocks. Try saying that really quickly when you haven't talked for a couple days, you guys. Tech stocks under continued pressure. Obviously, TikTok keeps getting volleyed around here, but the bigger story here are the large cap tech stocks. There's a rotation that's going on right now. I'll talk about that in a couple minutes. So vaccination and value stock aggravation. That's what the market's looking at right now. Headlines are playing a little around with the market a little bit. We're getting aggravated about it. I know that. Looking at the NASDAQ 100, one might even use maybe not the word ticked off, but it's, maybe a little firmer than ticked off. I've certainly been getting a little red in the face looking at the screen the last couple days, but we're going to talk about that aggravation, trading pre-market activity, what's going on, what can you trade this morning. I've got a couple of look backs at the stocks that we looked at last week. GameStop being one of them. Have you seen it? More than 24% higher after we talked about it last week. Chewy starting to show some signs of bouncing here. And fuel cell, as long as the market gives it a little bit of a tailwind. Thursday teaser, I'm going to tease you a little bit. I want to talk next time we get together about the transportation stocks. I'm going to bust this sector open. I've been telling you that you wanted to be in the trucking stops, but one of the things I've been able to do with this time that I haven't been talking to you guys is going through and looking at all my relative strength studies on the individual sectors, and this sector is now starting to gain even more speed. Then, of course, we'll go through your questions and charts. And I'm looking here at just a couple of them. And again, you're going to have to bear with me as maybe I can figure out a way to make this look a little bit better. But Lee's asking me why the tech stocks continue to pull back. Well, let's jump right into that. Actually, that's one of the slides that I've got here. You know what? Let's hit them real quickly in order. President Trump right now says he's moving closer to a $1.5 trillion stimulus plan. So now we've gone from 500 to 1.5 trillion, right? 500 billion to 1.5 trillion. So all of a sudden, everybody's trying to get to the center. And again, the Democrats are saying this isn't sufficient. They wanted the 2 trillion. I think we all know what this is. This is political strategy or political play at its best right now. You've got the Democrats that are saying they need more money and the Republicans that are just saying that they're not going to go that far. This is what I'm talking about, folks, with that aggravation right now with the headlines. It's turned into a political mess. People are trying to pull it out. And again, the Democrats are happy to put their feet up on the desk and just say, we'll wait until after the election before we do anything at this point right now. The market can go into the tank because that's one of the things that the incumbent has been running on. So adding to some aggravation for the market. Remember, September equals volatility. Also, one of the things we have to look at is, well, we're at about 6 weeks from the election. Everything is going to start getting turned around into an election item, and that usually causes a little bit of angst in the market. So expect the market to get a little more choppy just because of the election. On the coronavirus vaccination front, CDC director came out and said that the vaccine will not be widely available until the middle of 2021. Holy expletive here. We've been hearing from the administration and others that we're going to have one first at the year end. And then by November, the second week in November, hint, hint, think about what kind of timing that is. The week after the election. So This is just another one of those situations, and we've seen some of the vaccination drugs, AstraZeneca today, Moderna with a merger or with a partnership actually agreement is surging in pre-market activity. This is just shaking everybody up, and it really just ticks them off. And nobody likes to be ticked off and looking at the market getting shaking and holding stock. So volatility. President Trump's mulling a $300 million. This is separate of that fiscal stimulus I just talked about. $300 million in support to oil refiners. No surprise here. This is I'll call it just old-fashioned pandering. We saw it last week with changes to the ethanol addition to our fuel and allowing more ethanol in our fuel, I believe up to 15%, which takes you to the E85, which I know, there are machine or motors that are actually designed for that. But anyhow, that was a pure play to the farmers, the corn farmers out there. So we're really seeing politics start to come through the headlines and money that is being spent. Let's see what you're saying right now. I have the same matter, Nick. Oh, I'm not going to talk about other pitches. I'm sure that, oh my gosh, look who's here. Look who's here. The knight who says Neek. I'm sorry, I'm going through a couple questions here. Okay, I'm going to keep rolling. Looks like we don't have any real questions yet. Let's keep going. So this morning, tech stock seeing pressure again this morning. QQQ shares are ready to test the 50-day again. Not surprised is the first thing you should be watching. So in other words, when we look at that market, let's look at our first chart. And there's a chart of the QQQ coming up in there, but I just want to pull this up right now so we can kind of look at it together. You've got the NASDAQ 100 that is threatening to make yet another test of that 50-day moving average. And let's separate this out a little bit and get close and personal with the chart so you can really see it. There's your last 2 weeks of activity with the QQQ test. Little bit of a failure here. Remember I said 2 days. We wanted to avoid 2 days, and guess what? I'll be darned. We got our days above. Monday, we rally back above. We're going to get that again. Notice that 20 days rolling over a little bit. This is a serious test of this market's bull run. We want to see this hold, obviously. So watch volume today. Selling after yesterday's FOMC announcement is threatening to cross over into today's activity. So we saw Jerome Powell come out and say basically that we're going to see low interest rates. And it doesn't seem like we're going to see the inflation that we want to see as well. They're having problems kickstarting inflation here. No surprise because of what's going on with the coronavirus. So we're actually seeing the threatening of that moving over in today's activity. Of course, you've got the data dump today. The weekend the employment claims that are already out, housing starts that were a little weak, and then Philly Fed is coming. That's going to be a huge one, folks. Watch that Philly Fed number. They're all lined up, and they're going to give us a wider view of the economy. The first two kind of a swing and a miss. Third could actually put us back in play for the day. And also adding to the volatility is Friday's options expiration. It is going to be a little bit of an event. You've got a lot of options that have been in the money that slipped out of the money right now on the NASDAQ 100 and other large indices. That has an effect as we head into that Friday. We'll see pinning of options. I'm actually going to put together a list of those options that we're most likely to see get pinned and want to put together a little commentary on it. I think it'd be something neat for you guys to look at simply because it gives you a bird's eye view of the look at the how the options market can actually name a price. Hold on some of those comments. Make sure you put them in the Q&A area. Make it easy for me so I don't have to go through the chat, because obviously with my little limited technology here today, I've got to go over and look at that Vimeo app or the Vimeo screen to get those questions. So copy those and paste them in the Q&A area. I think that is open right now. Is it not? It is not. I'm going to do it right now for you. Throw those in there. All those questions and answers or questions, get them in the Q&A area so I can have one spot to look. I love going through your chats and reading some of those comments, but let's make it a little easier today. Tech stocks, here's the QQQ, that same chart, 50-day. Watch for the 272.5. Let's just call it 273 right now. Obviously, we're going to start with the poke below that on the open, but watch that chart today. This is what matters more than anything else right now. Of course, I got to give you a little bit of data. 50% of the NASDAQ 100 is now trading below their respective 50-day moving averages. 50%, folks. The number was 82% a month ago. So we're seeing a slip in the breadth of this rally. 17% of the index is trading in a bear market. This is as of last night's close. That number was 12% a month ago. So we're seeing a little bit of this. Some of those names in the index are starting to pull back, and that's where you get the 50-day number falling so much. 17%, I'm not really that worried about because we've got those airliners that are down in bear market territory, as well as some of the other smaller companies in the NASDAQ 100, not your Teslas and those numbers. But note that even Apple gets an upgrade this morning, and they don't get anything for it. They're down 1.2%. So I'm going to identify a few of those companies in my 11 o'clock live stream with the night trader people. We're going to look at a few of those companies because they are bearish candidates right now, folks. I'm not going to candy coat it. And also, obviously, the VIX is one of those candidates for a volatility play right now. Confirmation day for the NASDAQ 100 version 1.4. How long am I going to be able to play this one out? I mean, we've had 1.1, 1.0, 1.2, 1.3 last Friday. Now we're having 1.4 almost a week later. And what I'm talking about is, again, that 50-day moving average, that wily coyote of a moving average. We want to make sure we stay above that. What am I looking for today? What do I specifically? Well, I already mentioned the 172.50. I also need to see this number get more active. I need more people in there. 40, 50 million trading. Look at the selling pressure. And the last couple times that we had tests of that 50-day moving average, we saw some decent volume. 60 and 80 and 100 and 120 million. The fact that we're down here now, trading a third of what we were trading on that first bump, and granted, this was also some panic selling here. So you're going to see that volume number go higher. But now you've got half of what we saw on the last test of the 50-day moving average when we didn't have much of a 10% pullback. It was just bouncing around like a bean here. You know, a little jack in the beanstalk type of thing, going up, coming back down again, testing. You got your volume coming in. Now we're seeing that test happen with possibly less volume. Less volume is going to mean that there's less confidence that it's going to hold. And if we see a break, you're going to see volume start to pick up again. That's the dark side of this. So what we look for is a stay above that 272.50 with an increase in volume. I'd love to see 60 million shares traded on the QQQ today. That'd be fantastic, especially as we're going into that options expiration. That would give me a sign that, yes, this is just testing again. And the more tests we get, the more success we'll look forward to. The other side, of course, is the more you test this and this volume wears down, it tells you that people are just getting tired of defending it, and we're going to go down further. So that's what you prepare for. I keep talking about the second knock on the VIX. VIX pulled back to $25, a 50-day and the 20-day moving average right now in play. This is what I'm talking about when I look for the possibility of a volatility play on the market. I'm going to talk about that with my night trader people and my strike point people because it's time for a volatility play. It's time to jump on the volatility trade here. The VIX always knocks twice. Remember, I've been telling you that. The VIX knocks twice. Next one would take us up to a 40, 42 level or something like that, especially if it started to get towards the end of September and skirt into October, because that's when we usually see those bottoms happen. If that were the case, I'd be looking for a VIX that's going to be up in the 50s because a VIX actually trades higher, has higher peaks in October. And that's because even though it's not more volatile than September, it is the turnaround month. It's the bottoming month. So that usually means that you see a higher VIX reading. The high peaks on the October VIX readings are higher than September readings. So it'd be nice to have that happen. The one thing we haven't talked about is the VXN, which is the same measure for the NASDAQ 100. This is obviously a little more active. If we look at it, the 200, the 50, and the 20-day all giving support at the 32.50. This might actually be, and I bring this up because this might actually be the more viable trade here, more activity in the QQQs. So if we see more volatility in the cubes, which is what I'm going to expect, you look for a 55, 52.5 print on the VXN. I always talk about the VIX. I never really talk about the VXN with you. Ways to play this as well to the upside with volatility trades as well. So we'll be taking looks at those at the 11 o'clock. And then obviously in my notes to both my strike point and my night trader people. I'm trying to look here. You know what? Since the recommendation, yeah. We'll look at I like the Etsy's coming up here. I like that Etsy's. eBay also has been just laying around doing nothing on me, and that's one of the stocks that we've had a recommendation of the night trader for. These are getting ready. I think these are what we're seeing is some profit taking from these stocks that have been the COVID leaders. Now the COVID's kind of making a second round in Europe and coming back around. I think that we're looking for these to move higher. Let's look very quickly at that question, what's causing the selling? Well, I talked about last night with my night trader people in his commentary, the rotation. We saw a couple of weeks ago, financials, transports, and industrials saw increased volume and prices. That's what we've seen the last couple of days here as well. Traders are going into the financials, transports, and industrials now. Jerome Powell just took the financials off the table by saying we're not going to be doing anything with interest rates going higher. Financials are going to be that zero volatility, zero trend trade for the unforeseen future or into the unforeseen future. If you look at that XLF, the financials, you're going to see that this is, and you have a couple of breakout days. But when I start to back this out again and look, and that certainly looks volatile, but now we're out to looking at 6 months. This is a squeeze play that's going zero volatility. And you can find a couple of stocks in the group that'll actually give you a little bit of a run. Morgan Stanley obviously has been the standout because of their earnings report last week and more of a trend here. But the financials are having everything squeezed because interest rates are going down to zero and staying there into the unforeseen future. That's where they make their bread and butter unless they've got their trading desk. Also, they have to worry about a little bit of a thing called the COVID-19 pandemic coming back around in a double dip recession. So when you add that into this is one of those risk off sectors that you need to stay away from. XLF kind of gives you little upside potential and more downside potential, or the potential to just sit here and do nothing if you're holding the stocks. That's what I'm talking about when I look at the rotation the last couple of days. You've gotten some buying activity in there, but at the same time, they're doing it at the cost of large cap tech. When you have IPOs like Snowflake coming out, and I saw your nice little puns, the snow melting, etc. I love it. Absolutely love it. But anyhow, 100%, this is going to be the star IPO of the year, probably the way it looks right now. But you're going to see some of the activity move away from technology. Some go into transports, and I think the transports are a viable upside argument. The industrials are shaky, but they saw an increase over the last couple of days, and I took it from the cubes. This is the same thing we saw a couple weeks ago, and it started, but it stopped pretty quickly when everybody realized that the true value, is in the large cap tech sector because it's still attracting all the attention. So what am I trying to tell you here? The last week or so of trading has seen rotation from the cubes, let's just say the cubes, into these other sectors. I expect that to stop after we see this test and for everybody to start heading back towards the NASDAQ 100 again, because that's the exact same trend we saw. Dividends look sexy until stocks start going down. Then you want to be buying dips, and buying the dips happens when you get into these large cap tech. It's the same trend we saw. It lasted 2 days the last time. We're in 4 days now. I think it's probably going to take us past expiration, and then next week we start to see a little bit more of a trend to the upside again. So historically, you'd see and this is another big point. Historically, I'd tell you, man, people rotating out of those stocks into the industrials and the financials is a warning. But the IWM is still showing us that the risk on trade is on. Here's your IWM print. When we look at this, it is still, even though it got a little wobbly, did a little bit of a Bambi with us, played with its 50-day. This is what we'd like to see from the NASDAQ 100, folks. A bounce, trade below, bounce higher, break above your 20-day, and then you're going to be off to the races. Volume has been nice on this as well. If I pull this down here, you'll see the volume on the IWM has not been on small volume. It's been on good volume. So you've got traders out there that are telling you that the risk on trade is truly still on. There's your zoom up of this situation. Nice test of the 50-day, rebound, takes out the 20 starts going. This is actually a nice situation that actually shows you what a strike point trade looks like. When you cross back above that 20 and get your confirmation of your 50-day test, your RSI still has room to move higher. Volume's good. everything looks like it's nice for takeoff here. So we have to count that into this equation that you've got a risk on trade. Bottom line is you still have to watch that 50-day on the cube. So sorry to be boring here. Let's look at a few headlines and movers in the pre-market. I've got some flashbacks here for you too that I want you to take a look at. GameStop being one of them. That was a strike point stock, and I actually told my people yesterday that I kind of feel like I missed it because the option prices were a little too expensive for us to jump into a position, but the stock has gone up 23%, for goodness sake. Moderna this morning announces a collaboration with Chizzy Group, also announces collaboration in licensing agreement with Vertex, VRTX. The stock is trading up 4.1%, getting ready to take out that 50-day moving average. I actually could get a little egg on my face because I told you this is going to be one of those stocks that you want to trade to the downside when you get these rally. We break above that 50-day moving average right now with the 20 starting to turn higher. You may get a little steam here on Moderna. The horse race is really starting to get a little bit more exciting here. I've got to bring up obviously AstraZeneca. We've had a gap higher on Tuesday. We got up to that 55 and the 50-day moving average here, pulled back just a little bit and retested it again. The stock is looking like it's ready to start trending a little bit higher, get back into that nice trend, or at least set up for that headline type of takeoff here. That's when we're going to close out our bullish call on the position at whatever profits we've got, because I think that's going to be the point to be cashing out. Now, obviously, the coronavirus the headline that I mentioned earlier about a vaccine not coming till 2021, it's going to put a little bit of a top on some of these stocks, but at the same time, they're the trade to be in. Chewy, I mentioned last week after they guided higher, they did everything right. The stock came down to the 50-day moving average, started to show a little bit of a bounce, but here's your updated chart for it. We actually pulled back even further, sat on that 50-day. You got a nice little bounce. Now the stock is starting to get, after yesterday's activity, a little bit less volume than I'd like to see, but starting to get a little bit of a foundation that you built there at the $54 level. Watch for this stock to move up to the 60. You got to break through the 20-day there, but Chewy, obviously, with everything guiding higher, starts to look more like a situation that's going to trade back up like Zoom to those highs again. See, GameStop. Here's the one that puts a little egg on my face. Got a strike point signal from it the day after I talked about this pullback. The stock just cratered. Let's look at the chart that's happened since then. Cratered down to the $6, tested the 20-day and held it. Got an upgrade from Telsey Advisory Group. Also got an upgrade to outperform from Jefferies at the same time. This stock actually found that support. I had a strike point signal for this. Did not do it because the options were too expensive when I looked at them, and the stock is now traded back up to $9 as a high 875. GameStop is going to make a little bit of, and I actually pointed out that this looked like at this point with the stock, pointed out and said, hey, I think, not only is it a strike point, ironically, but it's getting upgrades. It might have a run, and made fun of myself throwing away those game platforms when we cleaned out the house. Now you've got the stock trading back up. If you did buy into it, you want to have that trailing stop in. 22% yesterday, it was up for the day. You want to have that trailing stop in. The stock comes back down to $8 at some point, then gets a little bit of a headwind again. But when earnings season comes around next time, I think you're going to have to watch yourself. Fuel Cell also missed. This was another one we talked about last week. Missed. Said that I'd like to buy more at $2. Disclosure, I own the stock. I have position in Fuel Cell myself. Here's the updated chart, and this is a zoomed in version of it, so it looks a little different, but that 210 was really the bottom for it, traded back up to 250 right now. You got that little flesh wound cross here, not the death cross, but the flesh wound cross with the 20 going down below the 50-day. Not concerned for that. I think Fuel Cell is one of the ultimate trading stocks here. This one still has a target of $3.20 for me. And then look at a couple new ones, A.O. Smith, and somebody out there, ZB, is going to like this one. A.O. Smith upgraded from buy to neutral at Rosenblatt this morning. Target raised $62. Obviously, they're trading at 52. That gives you a $10, your 20% run, roughly. Like the move here, even though the housing numbers this morning were less than expected, a little lighter than expected, I think that you've got a little bit of a pause here. Remember, we're heading into the slower season, so you're going to see some of those people, the building permit numbers coming down let the inventory kind of wash itself up. AOSO is one of those providers of products that go into houses, including hot water heaters. The other side of that trade, the ZB has been telling us about Carrier Global, CAR. I do like this stock as well. This is the spinoff that we saw that is that got your Carrier air conditioners, et cetera, et cetera. It is considered an industrial, so it's a little bit of a standout with its performance, but the stock finding some support at 30 after testing the 20-day moving average, targeting $35 here on Carrier over the next probably 4 weeks or so. I'm going to set myself up with the teaser. The transports are heating up. This is one of the things that I'm going to talk about the next time we get together. We've been all over the trucking segment. CHRW, those companies kind of started to take a rest. There's a rotation going on in the trucking segment itself. But when you look at it, and we'll just look at it by saying the IYT, because that's that index, the ETF that you can purchase the actual transports through very easily, has all those companies in them. And when we look at the IYT starting to make new highs here, this is an old school, if you're a Dow theorist out there, and I know there are a couple of them out there, you've got the IYT making new highs. If we can get the S&P 500 making new highs or the Dow making new highs, this is an old school play. It tells you that the transports are leading the market, and technology normally is the new Dow theory, if you will. But this goes back to old Dow theory. And if the transports are leading, it tells you that the economy is doing well and that things should continue to go higher. A good market rally is led by transports historically. Well, we're finally getting to the point where the transports have come out of this crater and are starting to leak. I like the attention that it's going to get. Look at the volume on the IYT that we've seen. This is a sector worth breaking down and looking at, and that's exactly what we're going to do. Booking companies, rails are up. We're going to look at these companies, and I'm going to give you 3 year-end stock picks with targets. So with that, and I'm not even sure how much time we've got, guys. We've got about 13 minutes here. I am going to go through and get some of these questions from you. Current option pricing been a turn into a lot of trades. It absolutely has, Doug. You know what? When we look at the option pricing that has, and let me see if I can pop a chart in here so we can maybe have both screens available at the same time. And I can't wait to have my home office back and be back in the trading den so that I can actually share everything here with you. And maybe we'll have to fix up a little something extra tomorrow. But there, at least I can pull up a chart and I can look at your questions when I'm doing this. So you're exactly right. We have seen a situation where the option pricing, the premiums you're paying have been a deterrent. I'm not going to jump into an option trade where I'm 30% behind just because of the bid-ask spread. That's a rule of mine. 15% I'll start to look at because we can squeeze the market on our recommendations. When you get down to 20 and 5 and 30 and 35% even on some of these, it's just not worth it. So I stay away from them. I tell you when that's the situation. And you know what? We look for other companies that will play. There are plenty of trades out there. We just need to find them. What do I think about Amazon? That's a great question. We talk about Amazon all the time. AMZN. We're heading into the busy season for Amazon right now, as we're going to see holiday shopping obviously be done online. You're not going to be seeing people out in the obviously the JCPenney. I think Kohl's and some of these other companies are going to have an issue as well. Chart's coming up here for a second. Pull back to the 50-day moving average. I'm not surprised to see this. Remember, this is one of the top 3 companies in the NASDAQ 100 right now, up there with Apple, obviously. And you've got a situation where these companies are going through some profit-taking pains. So what we want to see from Amazon is, and I think you're going to see Amazon in this particular situation probably go and test that 3,000 level. 3,000 takes a test, you come down. That's a chip, maybe a pitching wedge from here. That's a chip shot. And then you see that round number hold. That's the same level that we saw in July hold as well. And then Amazon's going to start to end a little bit, or start a little seasonally strengthened period that'll head up through probably a little later than Thanksgiving. But I like Amazon still. Think it's a long-term investment. It's a great investment, and believe that you actually in the short term will see a bottom that comes out around that 3,000. Let's talk about metals for a second, because somebody's asking here about FCX. Good copper and gold play? Absolutely. Now, problem with the gold and copper play. And I've got gold positions right now personally, and I've got gold positions in both the Night Trader and the Strike Point service. So let's just look at the miners themselves, GDX, and you've got a situation where the miners are going to pull back a little more today because the damn volleying about this, the volleying to and fro with this deal, the stimulus deal. Once that stimulus deal goes through, we're going to see gold start to take off again. The miners are going to go as well. Silver seeing the same thing. So when we look at these positions right now, these are positions in the miners, whether it's FCX, whether it's Newmont, whether it's, yeah, name the gold miner. Harmony Mines is right now one of the stocks that's on my list as well. Harmony pulling back this morning by 1.4%. You look at these as a longer term play. You got a little bit of a trading range right now, and I'll pull up the chart for FCX here now that we've looked at a couple of others. 50 days are still in nice uptrends on these companies, and Freeport McMoran is no different right now. They're seen as the giant that everybody goes to. Them and Newmont, everybody likes those two. The smaller miners are going to get a little more of a pop here and there and give you some quick, fast, aggressive moves to the upside. Freeport McMoran's going to hold this, I believe, for a while, this trend that we've seen, and it's been a strong one. Nice volume on it. It's a good company. Like it. Etsy. Why has it been sinking since recommendation? What is it doing? I like the again, the bluntness of what is it doing. But anyhow, when we look at the Etsy shares right now, it has been a little bit of a consolidation slash following the market. We've got a little bit of it was heading lower before, and now over the last 2 weeks, just doing this little dance down here. If it weren't for the market's headwind right now, we'd see Etsy trading above the 50-day. Want to watch that 20 days. It comes down to the 50-day. Bottom line is volume has been inconsistent. We've seen spikes, drops. I want to see this 108 level, and that's been that level that I've liked to watch. The 108 level hold and then act as a bouncing pad or a launching pad here once we get this market headwind out of the way. If not, it's going to be time to take, you could see, and I'll say, a rally here would also start to form a little bit of a head and shoulders. There's your left shoulder, your head. This would be your right shoulder, a little pop up and test the 50-day, and a failure would start to cause a little alarm. But right now, we watch this 50-day and make sure that it doesn't go into a bearish trend. It is a profit taking. That, to get to the root of your question, this has been profit taking. Not great headlines, not bad headlines, just profit taking from the group. How do trailing stops work when stocks gap down overnight? Clarence, that's an amazing question. I love that you asked that. Thank you very much for that. So you can have two different stops. You can have actually you can have three different stocks. You can have a trailing stop. You can have a stop. You can have a stop limit. So a stop, just a regular stop, is going to be a price that you identify. Let's say it is for example, $100. The stock's at $100, and you say $95 is your stop price. So you put in a stop order with a stop price of $95. If that gaps down overnight, well, if it gaps down overnight and comes back up, you're okay. So if it goes from 100 down to 94 and it opens the next morning at 100, and then let's say it comes down to 96 and goes back up to 100, you're fine. If it gaps down to 94 at the open, you're going to get filled at 94 because your trigger price is 95 and it's not a stop limit, which is the next one I'll talk about. It's just a stop market. A stop limit price identifies a price that you want to sell, it'll be triggered at, and a price that you'll take, your limit price, so the least amount that you'll take. And let's say in that same scenario, you say that your stop price is 95 and your limit price is 95. Well, if the stock gaps down to 94 the next morning, it will be triggered. Your sell ticket will be triggered, but it will be triggered with a limit price of 95, and you're trading at 94, so the stock has to come up to 95. In those situations, you could trade all the way down to $50 and your trade will never get executed because you've got a limit price of $95. So it's important to remember, if you see gaps lower and you've got a stop limit, you may need to reassess your price for your limit price and possibly lower it. Or you simply wait if you think it's going to come back up to 95 and you'll get executed at 95. Finally, the last one is a trailing stop. You can do $1 a percent, and it is literally if same scenarios here, but it ratchets higher as the stock goes higher. I always use percentages because dollars change as your stock prices go up as a matter of percent of the stock. So in those situations, again, you can have a same situation where it's got a limit or just a market, and I use the markets on those because I don't want to get killed by, if I'm using a trailing stop, I don't want to get killed by a stock that's going to gap lower and just keep careening lower. I just want to get out at that point. I hope that answers a question on the three. I probably should write something up because that's a great education piece that could be done on it. How low will Apple and Microsoft go, looking to add some shares? Obviously, I can't tell you where you want to add them specifically because I am not your advisor, but let's take a look real quickly here. While this is coming up, precious metals going into the election should go higher, John. I believe that we're going to see there. It's inevitable that we're going to see fiscal stimulus after the elections, and that's going to affect obviously the dollar, and it's going to give us a bump in gold and silver as well. And I see that heading out through the end of the year as well. One of my best trades, I think, out there in terms of a slow-moving investment portfolio type of trades is shorting the dollar with the UDN and being long silver and gold with the SLV and the GLD. And this is where I'd normally sing Silver and Gold by Cornelius, but I'm not gonna. Apple 50-day. Notice we haven't touched it yet. I think that's where it stops. 110 is the spot where I'd put it in, where I'd start putting buys in. And 100 is where I'd start buying it again. Dollar cost average on Apple, guys, because we know it's a great investment. It's going to pull back and then it's going to continue to go back higher again. Uh, Darden, DRI, the other one of my favorites to play, and I got messed it up by putting in a slash in there. DRI. So Darden Restaurants. Don't think that it's necessarily a good put candidate right now because you've got momentum with the 50 and the 20-day coming higher. You're overbought right now a little on the RSI, so it's not going to climb as quickly. You'll see some small corrections. The bottom right now for it is, if you look at it, the combination or the confluence there of the 20 and the 200-day, $87 I think is where you'd find that support kicking in for the stock if we pull back. So you get a $5 pull, maybe a 4.7% pullback in the stock. And then you've got the 50-day coming in. Darden's a good executor. They've been a great executor after we got things back online. It's hard to be short names like the Capitol Grill and Seasons 52 and obviously the Olive Garden. We'll see what happens as things start getting colder outside and people start staying inside. But, um, ping. What are you yelling at me, big? Let me know what that is. I just got to that question. Ping. CWH still a hold. This is a great question. This stock has been, again, another volume. This is some institutions taking profits in the stock here the last couple of days. Drops. You've got a 20% drop in the stock over the last 2 days. The last two, and I told my night trader people in my commentary last night, the last drops that we've had like this have resulted in another rally of about 20% over the following 10 to 14 days. It's 7 to 14 days, trading days, actually. So it's an average of 10 trading days, which is 2 weeks. This is still a hold. We have an option that will expire tomorrow. It's going to expire at a big loss, but we already closed one out during this rally that got us 100% gain. We're going to be dipping back into this night trader, people, with another call that's going to give us another run to the upside. Oh my gosh, Jim, great question. I've got to pull up the AEA, I'm sorry, alternative energy stocks. I've got to pull up the value of that. They're Tesla, Plug Power, Genco Solar, Blink, Neo, Tesla, Workhorse, Nikola, Enphase, and First Solar. That is your AE, and I will have to pull up an update of those entries or those positions because we were doing very well on those. We saw a huge run in all of these companies earlier this week, and I think we're going to expect to see them again. So I will pull that up and write a little update for you. I think we got the questions out of the way just as the market begins to open. Shopify offering a stock sale at ZB at 900 share. Is that why it's falling? Absolutely. This is the same situation we saw with Camping World Holdings when they offered shares a month and a half ago. And in that situation, it was exactly that. They are trying to capitalize, put money in their company coffer so they can go out and do things with it, expand their businesses. So that's exactly why it happened, why it's falling, because they are out there offering it at a lower price right now, getting money. This is just them putting gas in the tank so they can continue to grow, put money into that model. I don't think Neo IPO'd too early. I think that you've got a little doubt on the electric vehicle or any type of alternative power vehicle. I don't think they IPO'd early. I think they're just one of the whipping. You know, they're taking some of the brunt of the. Um, they should have taken a little bit more time in terms of getting the model out there and explained well. Now you got a lot of short people writing about Neo and also Nikola. So they're kind of, it's fun to beat up on these companies. Tesla got beaten up on quite a bit back in the day. That is going to be it. We're 9:31 here, so I'm going to go ahead and sign. I like the DPHC, the Lordstown and Workhorse. Workhorse will be going to work in Lordstown. Workhorse, if you haven't seen the stock price, has been going through the roof, working like a horse here, if you will. Pulling up the chart there for you, down today. So it's down more than 6% at that $1.68. This is going to give you a chance if you do have it. Remember, you want to have a trailing stop because it's gone up 20-some% the last couple days. Workhorse is going to ratchet itself down here. Get back in to the stock here. I'm trying to get a price. I don't know why this signal. Here we go. 22 is probably going to be the next limit as I get into. And this is a position that I hold. This is a position I have my gosh, investment and trade in Workhorse. So I have held the stock since it was $2. And in this situation, my trading portion actually probably just got stopped out today because it had a 5% trailing stop on it. So it did, definitely. And I'll be looking for a limit at $22 to get back in. All right, guys, I am doing strike price tomorrow, and I am going to be not with you tomorrow. We won't have a markets open tomorrow, but we will have a strike point, and we'll also have a night trader session. So looking forward to that. And then on Monday, we'll go through the alternative energy portfolio that we built, as well as the transportation stocks. That'll be a nice little dovetail for us. I'm going to wish you the best trading success. Now, watch the NASDAQ 100. You've got the comp down 216, which is 2% right now. That QQQ, thank you, John. Good to see you there, buddy. Hey, I'm down in your area right now, just up the coast from you. Hope again, can't wait to get home, but really good to see Imagination, that logo coming up here. Missed it for a week or two there. But watch that QQQ 50-day, guys. Everybody wants to keep their eye on that. This is what I'm going to be watching the closest today for sure, is the NASDAQ 100 and the 50-day moving average. Need to see some volume. Have a great day. We'll talk to the night trader people at 11 o'clock. And I wish you the best trading success, everyone. Bye-bye.